So buying personally, buy through the business, common question. Literally probably have it at least once a month, I would say, in terms of where do we want to buy the vehicle. So I guess a few common things to look at between the two are, buying in the business. And when I say business, is probably company is the one we'll look at versus buying personally. The main things to look at are FBT, GST, and the business use would be the main things that you'd probably consider when looking at where to buy it. Generally, a higher business use would tend to move the purchase option to the company. However, not all the time. So there's a lot to consider. Buying through the business, you can claim the GST credits if you're GST registered. You can also, if you personally buy it, if you are GST registered as a sole trader, but as an employee, you'd miss out on that GST credit. In the company, you can deduct the business use portion of the running costs and you get the depreciation benefits. But buying personally, that's obviously a lot simpler. No FBT because you're not providing a fringe benefit to yourself. And you can still use the logbook method or the cents per kilometre method, which is a lot less compliance related. So, those are the main points.
With buying personally, you can usually claim it in your personal tax return. And like Andy said, you can do the cents per kilometre, which is if you've used your car for example, 2,000 kilometres throughout the year for business purposes, you can claim, there's a calculation that the ATO has where you put in the 2,000 kilometres, it calculates your deduction, and that goes onto your tax return. But a better way to do it would be with the logbook. So with a logbook, you need a 3-month logbook. Shows your business kilometres and personal kilometres, and so there's like the business use percentage. Then you can put in all your expenses there, so registration, insurance, fuel, any other maintenance costs, and put them in there. And then the business use percentage gets deducted on your personal tax return. But if it was in the business, all those expenses up to your business use are all deducted through the business. So it might be better for cash flow wise. And like Andy said, if the business use is higher, it'll be a bit more beneficial within the company or the trust or wherever the vehicle's purchased in. All right, so usually we get the question whether they should buy outright or finance it. So the difference is with buying outright, you're literally paying for the vehicle outright. There's no loan repayments, no loan. It's just done there. Obviously, that's subject to cash flow. If you don't have the cash for it, you obviously can't do that. There's some benefits for both. So benefits would be there's no interest on a loan, but you still get the same GST deduction whether you were to do it through a loan or buy it outright, and the depreciation will still be the same. So with financing, what are some things people should look out for, and what are the main differences and benefits for it?
Yeah, so basically when you look at the financing side of it, what people tend to do is they'll either go and get a vehicle finance, which is usually financed over 7 or 8 years, sometimes less. And what that does is it allocates the principal repayments over the same timeline as the depreciation of the vehicle. So from a cash flow perspective, you're managing your cash flow by lining up the deductions with the cash outflow. So that's one way they do it. Another way is they'll do it through a shorter term one, like a Toyota Access or something like that. It's 4 years usually, and they just upgrade every 4 years. So it depends on what sort of vehicle you want to get and how often you want to upgrade. The other thing to keep in mind is what a lot of people do, especially mum and dads, they'll borrow money from the mortgage, put it into the business, buy the vehicle, or they'll get an overdraft or some sort of loan, buy the vehicle, but then not repay that for 10, 15 years. And so even though that may be at a lower interest rate over that long time, the interest they pay in total is much more than the vehicle finance. So that's just something to keep in mind, that the total cost of owning the vehicle can quickly go up if you don't make those repayments.
And just to recap on that, with the finance payments, the bigger the actual payment is, the less interest you'll pay. So you'll find if the payments you're doing on such a big loan are actually quite small, the interest portion of that is quite high. And how it usually works is those interest on those payments is quite high at the start of the loan compared to the end of the loan. And that's why it's sort of good to understand how that works. You do get the interest deduction for it, but you're still kind of out of pocket there because you're paying for that interest as well.
Yeah, that's right. And another good point is to just shop around. So there is a lot of variability in terms of the interest rates and other on costs in terms of financing. So get a good broker, and it'll save you thousands.
Yeah, especially one that can walk you through it so that you can understand it, because there's different methods you can use, such as balloon payments and things like that, which can help lower the interest amounts. And what a balloon payment is pretty much just a larger lump sum payment, sometimes at the end of the loan or sometimes even at the start of it, just to help with paying off that actual debt.
Yeah, that's a great point. So finance is one aspect of buying the vehicle. The next one is how much you're actually going to get in terms of a deduction for the vehicle that you buy. So there's a few things to be aware of when it comes to that. So this year there is the instant asset write-off that's $20,000. What that means is if you buy a car or anything that's under $20,000 that's business related, you can get a deduction in full for it. Otherwise, you're going to have to be depreciating the vehicle over 8 years or 25% diminishing value. So that is also a common misconception. Where you buy the car in the middle of the year, for example, you don't actually get the full value in that year anymore. You used to when they had the unlimited asset write-off, but now you actually will have to pro-rata the depreciation for the 6 months. And there's also a cost limit. So if it is defined as a car, you only have a cost limit of $69,000. So what that means is if you buy the car for $120,000, you only get to deduct $69,000. And I'll let you explain that a bit more detail. But then if it's a fuel efficient car, you get a bit more. So you get $89,000. So the ATO and the government are trying to push that fuel efficient car onto us. But I guess what are the details of those implications if they do buy above that cost limit?
Yeah, so with the cost limit, as Andy said, you get the deduction of up to $69,000 in depreciation, and then also the GST deduction that you'll get on when you purchase the vehicle, which is a bit over $6,000 as well. But the ATO has a definition of a car, so to stop people from buying super expensive SUVs and trying to claim the full deduction, they have set that cost limit there. And the way to, not I guess avoid it, but to be able to get the full deduction, there's some definitions that the car needs to meet. So one of them is the payload of the vehicle needs to be over 1 ton. So a lot of people think they can just buy any dual cab ute or any massive truck and they can get away with it. But fortunately, there are some rules behind it, specifically that 1 ton payload. And there's a lot of vehicles that you'd think should have it, considering the price as well, but don't. So it's something to keep aware of. So I'll go through a list of some cars which you'd think would have it, but their payload is actually under 1 ton, and so you don't get the full deduction for it. So if you're buying a dual cab ute, like a Ram 1500 for example, that are retail for around $120,000, their payload is actually under 1 ton. So you can only claim depreciation up to the $69,000 mark, as well as the GST, you only get up to that $6,000 mark. So what you're missing out on, I made a quick calculation to go over it. For example, the max depreciation you can get if you had it for the full year in the first year will be around that 15 grand mark if the payload is under 1 ton. But if the payload was over 1 ton, you'd actually get almost double that. So around $30,000 on a 120 grand car in depreciation. And with the GST, you could also get an extra 4.5 grand deduction right there when you purchase it. So when you are looking at purchasing a new vehicle, make sure you keep that in mind, because it can really screw you over if you're looking, I mean, you'd expect it would, right? For a 120 grand car, you'd expect the payload to be over 1 ton, but when it isn't, it can really screw you over, not just because of the actual costs you're missing out on, but then on other things as well. If you have FBT use, which we'll go into, which is pretty much personal use, there's a tax that the ATO have created to stop people from buying vehicles in the company and just use them completely personally. It's called FBT, or Fringe Benefits Tax, which we'll go into now as well.
Yeah, and it's a fantastic point, because we've seen it happen time and time again where they've gone out and they've bought those big American utes and the payload's not above the 1 ton mark. So,
and there's some modifications you can do, but sometimes it might be an extra $20,000 to increase the payload, which is insane when you're already spending almost 120 grand in a new car.
That's right.
Definitely something to keep an eye out on. There's also another rule that if the vehicle can carry over 9 passengers, then it's also exempt from that car cost limit. So you can claim depreciation up to that full price of the vehicle.
Yeah, so examples there being like minibuses and things like that. So if the ute has a carrying capacity over 1 tonne, things are looking good. But if it is under a tonne, something to keep in mind and to see your accountant about is that it still may be eligible, but there is some other tests that have to be done. Yeah. So if it's under a tonne, go see your accountant. They'll work out a strategy and you can push forward with that if you want to buy that or change the vehicle or whatever before you buy it. So always get the advice before you go and make that decision.
And the example I made previously was worst case scenario. So if you don't meet any of those exemptions, then that's what you can be up against for tax wise.
Yeah,
but obviously
that's right.
there's some exemptions and some ways around it if it's done right.
Yeah, exactly. FBT, so what you mean by FBT is a fringe benefit tax. So where a company provides a benefit to an employee, associate director, the list goes on, the company has to pay tax on that for providing that private use to the employee or whoever it is. So there's a few different methods that you can use when it comes to vehicles. There's the statutory method, which is just a flat 20% on the total cost of the vehicle. And then there's the logbook or operating method, which is based on the actual use of the vehicle. So generally you'd use the logbook method if there's higher business use. And if there's low business use and or no logbook, well then would use the stat method. But I think you had a great little summary of how much you can save by using the logbook method versus the stat method.
Yeah, of course. So we'll take that Ram 1500 for example. With using that 20% statutory method, the actual payment, the actual value, the FBT value of that ute would be around $24,000. So that's an extra $24,000. How it's done is you either pay 45% tax on that $24,000, or you can contribute it personally to pay off the company for the $24,000, but the company also has to declare that as income. So the company needs to, the company will need to claim GST on that, which will be around the 2,100 mark, and then also tax on that as well, which will be around $6,000. So if they're on the 25% tax rate, which most companies are, so that's an extra $8,000 you have to be paying in taxes if you don't have a logbook, if the payload's under a tonne as well. Like there's a lot of things that go into it, and that's why it's important to get the right advice to make sure you don't get caught up in that situation later on, because there's not much you can really do if you've already purchased it. Then later on you realise the payload's under a tonne, you don't have a logbook, FBT comes around, year end comes around, then you're slapped with all these taxes that you'd had no idea. You don't get the full deduction, you don't get the full GST deduction. So there's a lot of things that go into it.
And it's quite easy to keep a logbook these days. I mean, I know you've told some clients to use a digital version.
Yeah, there was an app called Driver's Note that we've heard is quite good and easy to do. And then the PDF is quite easy and it shows you the actual logbook.
Yep.
You can use it for 3 months and it's eligible for 5 years as long as everything stays the same. You still have the same vehicle. So it's a little bit of work for 3 months, but it can save you thousands in the long run.
Yeah, that's right. And I mean, like you said, 5 years you can use it. That's, for 3 months, why not?
Yeah.
So what's some other considerations to think about when looking at vehicles? Fuel tax credits, so heavy vehicles, we're allowed to claim a certain amount back from the ATO when we prepare the BASs each month or quarter. So that's just something to be aware of. Luxury car tax, so again, it's not a tax that we necessarily prepare any returns for, but vehicles that are over a certain threshold get hit with a luxury car tax, and that's just designed as an income generating tax for the government. Novated leases, so that's a good one.
I'll let you go into that one. I feel like you have a bit more experience there.
So look, novated leases, where you're an employee and you don't have the option, so where you don't own a business and you're just an employee, a novated lease is a good option because it basically makes your vehicle use deductible because it reduces your taxable income. So what you're doing is, let's say you're on 80,000, you've got a vehicle packaged and it's 10,000. Well, your taxable income is then 70,000. Sorry. There is FBT built into the package, and it's done through the packaging company usually. But it is a useful way to basically own a vehicle if you're an employee. I know a lot of people that work for like governments and things like that where they provide this as a benefit because the vehicles are provided to them and they've got no deduction themselves. So, yeah, just another good thing to look at as an option. But have a chat with your accountant and see if it's relevant for you. Not necessarily go and just jump and get one right away, but it is an option.
Yeah, and just to jump on again for those fuel tax credits, it's pretty much if your vehicle's over 4.5 tonnes, government has sort of an incentive for companies that use a lot of vehicles for their day-to-day work to be able to claim, depending on how many litres of fuel they use on those vehicles, they can claim a credit on their activity statements. So it's pretty much money back from the government. It's a bit of a help for small businesses that use a lot of heavy vehicles, and that's only eligible for vehicles over 4.5 tonnes, and there's different calculations depending if they're used on the road, off-road, or to power any fridges and things like that on the cars and vehicles, sorry.
Yeah. So I guess what everyone's wanting to know is, should they buy it personally or buy it in the business, right?
Yeah.
The answer is?
Depends. Well, it depends on your situation, obviously. You hear that a lot with accounts. Sometimes you want a straight answer. Should I finance it? Should I do a balloon payment?
Yeah.
It always depends on the situation that you're in, right? So if you're using it more for business, it might be most likely better to buy it within the business. But if you want to just buy a car to try and claim the full depreciation and get the GST when there's going to be no business use, it's probably not best to do it and just claim it in your personal tax return for any business use that way. Another thing to consider, is it considered a car or not? Definitely a big one, and make sure you get that right, because there's a lot of utes, even Ford Ranger, like the Raptors as well, they're quite expensive, and a lot of them, their payload is under a tonne. So if you see people driving them, just know that they most likely aren't getting the full deduction on them as well.
That's it, exactly right. So look, I think at the end of the day, it comes down to, what are your circumstances? Discuss it with your accountant and come up with a plan.
Yep.
Awesome.